Yo, what up everyone? In this video, I want to go over why it's very crucial to come up with a trading plan. It's essentially the secret formula to trading. The way I look at it is we have to think that when the market does X, for example, when the market breaks above our major key level, maybe it bounces off of demand, and I see Y, which is, reacting to what the market gives us, maybe some type of price and volume confirmation, then we're going to get Z as the result. And more than likely, that Z is going to equal profits. A lot of people come into the market, when the market does X, for example, break above their $100 mark, they automatically get in without reacting or without viewing the context. So in this video, I want to go over a past couple of trades that I took, some setups that we took in the Discord. I want to review them, their plans, and you're all going to understand from not only a technical aspect, but from a psychological aspect, the importance of this. Before we get into the video though, I'm going to link my Instagram in the description below at Ameritrade. I seriously recommend you all to follow this. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below. I definitely recommend following it. But now let's get right into this recap. First thing I want to get into is the action from Thursday, November 18th. There was a lot of things going on, and I want to break down this day from the minute of the opening bell to the setups that formed throughout the day, as this is very key. So to gain context, I want to go over the pre-market plan. I post these every single day in the Discord of the levels I'm watching, chart patterns, and potential setups I'm looking to actually trade. So every day we always watch the S&P 500 and the NASDAQ. In this case, the S&P, we had a very bullish chart. Supply was at 47.04 that we were watching for a break above to test all-time highs. And we also had demand lower at 8.2 and then 7.3. So I will say in the first 20-30 minutes of the market open, we were very flat. We were very choppy. Now, if you've been following me for a while, you all know that I love trading ES and I love trading NQ, SPY and QQQ options off of those charts. Not only are they my favorite instruments to trade, but I also use these two as a somewhat confirmation if I am looking to trade another market leading equity such as Apple, AMD, Amazon, Tesla. It doesn't matter. I always like looking at the market to gauge not only direction, but to gauge context and to gauge sentiment. So in the first 20 to 30 minutes of the market open today, we were very flat and there really didn't look like anything was going on. In fact, I posted in the intraday commentary tab that I wasn't sure how I felt about the open. I wanted to wait for more development for clear, high quality trades. Now, as that was going down, Amazon was on watch. This was in the pre-market plan as well. Now, this is what I mean about when the market does X. X is our levels of interest that we are looking to trade at. It could be a supply or demand zone. It could be a support or resistance level. It could be a trend line. It's just an area of interest that we are looking to trade. A lot of people have their areas of interest and they automatically enter the market once it reaches their level of interest, which in my opinion is the wrong thing to do. You're going to see why. So Amazon, I said it's okay of a setup. I'm watching it if we could break out and build interest leading up to the $35.80 to $3600 mark. Essentially, 3600 was a key level. It was an area of resistance, but I was open to playing it above 3580 into the 3600 area just because this was an area of selling from Monday, and we came back Wednesday and tested it and really didn't find the same result as we did on Monday. To add the context that we bounced off of demand last Friday, some nice volume coming into the market, we obviously had buyers factored in. Now we just needed to see some type of interest and some type of volume to come into the market. And that's when we get our Y, when I want to see Y, which is the reactive factor to the market. A lot of traders don't react. Instead, they try to predict. I want a long Amazon when we come above 35.80. That's the wrong mindset. You have to say, when we get above 35.80, I want to get clear confirmation where my risk to reward would make sense. And once I get all of those two components, then most likely we're going to get Z. And if the trade works out in our favor, Z is going to result to profits. We also had a trend line. So let's just put ourselves in the mindset of a, poor, disciplined, and struggling trader. let's just say we had that level at 35.80 and automatically we wanted to get long when we broke above it. Not only does the first 30 minutes show there's not a lot of interest in the market, volume is pretty dead, and going back to ES and NQ, if I pull up NQ's chart now, in the first 30 minutes, we were up, down, and had no solid clear direction. We weren't bouncing off of demand. We weren't even selling off of supply. We were at no man's land. So at this area, yes, I have my level of interest, but I'm not getting what I want with the market, and it's not really corresponding to my type of analysis, and I have no real reason to enter, especially when there isn't confirmation. You always need to look for confirmation in the market. In fact, if there's no confirmation, I say this to InvestorTrade members all the time, no confirmation equals no trade. Okay, now this is where it gets interesting. So let me pull up the commentary tab yesterday. I was looking to get Amazon. I said, I hope some of you guys took that trade. I had an order to get filled at 10:01. As soon as I started to see some volume come in the market, some buying pressure, and us making our way above the high, going into that break above level of resistance at 3,600 bucks. So that's where I found valid confirmation to take the market long. I had an order out and I did not get filled. You all know Amazon spreads are pretty wide. So if you market order in this, automatically you're probably going to be down with slippage, and that is not the right thing to do. So in this example, I wanted the market to come to me. I had a limit order at 935. I saw it go to 950. I was going to replace my order and raise it a little bit. But the next candle, boom, straight up, right into the 3,600 mark. So put yourself in my perspective and put yourself in a perspective of someone who blows up accounts or struggles with their trading. For me, like I said, the setup has to make sense, not only market confirmation, but from a risk to reward standpoint. If I was looking to enter the market right here, and let's just say my target was there was supply at like 36.25. Let's say I was trying to get in the market here at 9:30 on the contracts. 3 minutes later, the contracts went to like 15 bucks or 13 bucks. Now, if I'm buying here at 13 bucks when I had an original entry at 9 bucks, my risk to reward is skewed. I have about a $4 gap in the contracts. And if we pull back and come to where I originally wanted to get back in, this is not going to be an area that it makes sense to stop out at. My stop originally was below the 35.80 mark. Now it has to be much lower. And now I'm risking, $7, $8 on the contracts, where at this case, I was really only risking $2 on the contracts or $1.50 on the contracts. And we kept ripping up and we kept ripping up. These went up to like 16 or 18 bucks at this point. And a mistake on my end was I should have looked to re-enter here. When we acted as support on that 3,600 mark, we flagged, and the same breakout we saw earlier with the volume coming in, you could see it clear as day down here. This could have been another good area for you to get long, stop below 3,600, and you could have had a nice rally on your hands. So all day rally, and the contracts went up, 400% from the time of entry. I know a bunch of members took this trade. Very, very excellent trade. And I just, want to go over what I saw and why it's important to react to the market instead of trying to predict. If we got in earlier, we would have been stuck in an all-day grind. And more often than not, it just backfires on us instead of benefiting us. Another example of a trade I took, this was on the S&P. I played SPY calls. What I was watching for as the market was developing, and keep in mind, I said the first 30 minutes was very choppy. Eventually, we got a very heavy sell-off with some nice selling pressure. So now we have some sellers showing interest in the market. We also had supply above and demand below. We got below the demand zone without showing any signs of buying, and it wasn't until we came into the 4.673 demand zone. This is very, very key. We bounced at it earlier in the week, and we bounced at it even last week. So very, very important zone that buyers must hold. So from an auction or a context standpoint, we would want buyers to continue showing effort in defending this zone. If it was different and we sold below it, this was on watch, the next day on Friday as well. We were watching for some selling pressure below the 7.3, 7.0 demand zone. I even said I was open to playing short. If we just got below 7.3 to 7.0, I'm not playing short right away. I got to see that reaction from the market. Again, this is my level of interest. That's my X. My Y to the equation is my reaction or seeing what the market does. And when I get those two, I get my confirmation at my level of interest. I get a full predetermined plan. I put it on. If it works out, I make my profits. I said I couldn't chase a straight shot down. I need to see some consolidation out of this demand. The risk to reward does not make any sense if I'm playing it to the downside, right here, especially in the current market conditions. I said I'm gauging this 4673 demand zone to be key. Heavy volume usually means a possible reversal as long as buyers show effort. If we rally out of here but fail to continue, I'm going to view it as weakness. So this is where I put another trade on. The market was selling off. We came to this demand zone. We saw some nice heavy volume. This is a sign of capitulation where the market sells off into the zone. Buyers are defending this zone. Sellers are getting absorbed. And then the market moves up. As soon as we start moving up, I'm okay with entering, putting my stop below the low. And now I have a nice trade on. Unfortunately, I scaled out right at VWAP. I wish I could have held on to more, but it hit my profit target. Risk to reward made sense, and I followed my plan to a T, reacted to the market, and I didn't like how it was stalling at VWAP. And it's how it goes. As soon as I sold, market rallies, right? To the tick at supply, to the penny. And we consolidate, test it again end of day, and it's a very, very key zone going into today because we opened above it. That's going to, go into Friday's action. But literally from demand into supply, I wish that would happen every day. That's in a perfect world. Now, another trade that I put on was NQ and QQQ. This was from the pre-market plan as well. Pull this up here. NQ, QQQ. This is where planning is very, very key. If you do not have a plan and you're not open to reacting to that, whatever the market gives you, and bending it a little bit to what the opportunities the market presents, you are going to struggle. I can't stress how important it is to plan and then react. So I said another gap up, not much supply besides this 16,427 supply to all-time highs. I'd expect this to get tested to see what's out there. If some heavy interest, this thing could rally hard through all-time high. The way I look at the market is it's an auction place. Sometimes we test different prices to see if there's interest there. And if there's interest, we could tell with some volume. That's why I use this gauge of, what I call VVM. And then we had demand lower to the downside that acted as support yesterday at 16,307. So just like ES, I didn't take NQ, but we had a nice lower wick. I know a bunch of members took this trade. Very nice analysis. It's a very good feeling seeing, you all watch my videos in the course and recognizing these opportunities, not only, on yourself, but as a group as a whole, seeing a lot of traders take the same exact setup. So nice wick, market rallied out of this. And actually, this is where I put my next trade on. So I didn't get long here because I was long SPY, and this is where it gets interesting. So this action intraday, we didn't know before the market opens up. That's why the market constantly spits clues out at us as we are developing in real time. You can't sit at your chair on your desk like a statue and come up with your levels of interest, but not react to not only the new things, but to the things that the market is currently presenting us in the present moment. The present moment in the market is the best moment. And a lot of people don't realize that. So this area consolidation right here actually qualified for a supply zone in this area, just like this. Act like this is a pink box. And the common theme in the market, we started to sell off, pull back into demand, gets bought up. Now we have buyers factored in down here with the sellers already gauged into the market. Now, these aren't very aggressive or very strong sellers because they didn't, get us below this key demand zone. In fact, we came back up and we tested this area again. Now, if the sellers from earlier don't show that amount of interest as they did when the market opened up in the first 30 minutes, the next time we test it, we are going to continue higher. Now, we've been seeing this where we consolidate at supply and we continue to move higher, especially when we had a very key supply zone over here with all-time highs at 16448. So like I said in the pre-market plan, most likely the market's going to test with what's out there. Are there buyers out there, or a seller's going to respond again when we go test it? So we consolidated here, just like that Amazon. I needed to see price. I needed to see buyers show interest. They're already getting on my radar from the earlier price action. We're already consolidating. We're already moving up past that supply zone. Now I just need to see some interest. And at 11:32, I got long the 400 calls on QQQ. 11:33 at $1.50, and I sold some at $1.38 as soon as we moved into supply. Now, again, we're coming into this key supply zone. It's a very small zone, and it is all-time highs. If the market shows this type of action right near or right at all-time highs, you would expect it to break the high and see if there's continuation, showing more interest, or see if there's responsiveness, showing a rejection and a seller into the market. So we continue going higher. I was actually on my Instagram. I posted a chart on this, and 5 minutes after I posted it, this thing ripped. And I got a few messages saying a bunch of people took the trade. So nice setup on that. We did rally past all-time highs, and then we consolidated, and I got out the rest of my position when we started moving back down. I got 55% on this trade, but I wanted a little more out of it. Didn't get it. Still followed my plan, and still was a very green trade. And we consolidated pretty much all afternoon. So again, the whole point of this video, right? Never think you know what's going to happen next. The minute you let your ego do the trading, you are going to fail, and you're going to put trades on that should not be put on in the first place. Instead, when the market does X, when the market comes up and tests supply, right? I'm not getting short right away. I'm not getting long right away. That's just my area of interest. That's my X. And I see why. That's my reaction. You don't react to the market, you are going to struggle and you're going to get left behind. My reaction was seeing if there was interest from buyers to show effort in pushing price higher to test all-time highs. When we get those two factors, then we get the result of Z. And like I said, most likely Z is going to equate to profits. Another example, I said Apple looks good if the market could hold up. We had demand that was getting created, so buyers are factored in. And I said we're watching for the possibility that if we rally above yesterday's highs at 155, we're going to create demand, and we can rally with all doors open into all-time highs at 157.26. Again, my level of interest at 155. And, this doesn't happen all the time either, but as soon as we broke it, I think news came out, and then this thing absolutely rallied. Some nice heavy volume, and that's what you want to see. Clean, straight shot up. And I really appreciate all the members that send me things like this. This is what happens when you follow the process and you understand the proper things to the market. Doesn't know why it took him so long to join the group. $405 profit, first $2,000 day. Respect the money, but detach from the money. Another one, having a plan and having confidence in your plan has to change the way he sees his trades. Nice $2,600 profit on Facebook. I'm telling you guys, come up with your plan and have the confidence to stick to your plan. Follow the process and detach yourself from the money. Nice calendar right here showing consistency. It's very important. You tweak a few things, you remove some bad habits, and you're one step closer to becoming consistent. This one member has been absolutely killing it. He's growing his account exponentially. It's actually pretty crazy. Nice $25,000 profit. Very serious profit right there. And, just value being provided. It's amazing to see other people and their trading, do a complete 180 in the other direction in the, better way. So follow the process, have a plan, focus on the process, not the money, and have confidence to execute your plan, and it goes a long way. So I think I'm going to leave you guys off on that point. If you enjoyed the video, drop a like, subscribe to the channel, and if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord and no extra cost. I will be adding a tape reading section to it, and I do plan on increasing as I add value to the course, the price will increase as well. So I'm ending it. Peace out. Have a great weekend.